One of the most important things to understand as a real estate investor is depreciation. This is specifically for rental property, not a vacation home and certainly not your primary residence. Of that rental property, what is eligible? We're going to take the value of the land, which the IRS says cannot be depreciated. We're going to kick that value out, and what we're left with is the building and the improvements. The default method for depreciation is going to be what is called straight line. Now, this is going to be 27 and a half years for residential property and 39 years for commercial property. Alternatively, the IRS gives the option for a modified accelerated cost recovery system. Now, this is going to allow you to do a segregation through a cost segregation study of 5-year, 15-year, and 27 and a half year property. 5-year is going to be appliances, window coverings, removable carpet, removable fixtures. 15-year, the driveway, fencing, walkways, and 27 and a half year is going to be everything else. Electrical components, the HVAC equipment, the roof, the framing, etc. By doing a cost recovery system, all of those will be delineated, and what you're able to do then is take the 5-year depreciation over 5 years, 15 years over 15 years, and 27 over 27 and a half. Now, why would someone do this? And the reason is because you're able to get more of a tax write-off, right? Experiencing more depreciation in those first 5 to 15 years than you would using the straight line method. Now, let's talk about bonus depreciation. Now, what this allows you to do is instead of taking it over 5 years or 15 years for these two categories, bonus depreciation allows you to take both of those categories in year one. So this can be a huge tax benefit for real estate investors. It's important to understand the passive loss limitation. This is going to be limited only to the passive income that you receive. So this is going to be through rental property or through a passive business. So only this category of income can it be deducted against. The way around this is going to be what is called the real estate professional status. There's going to be 3 very specific rules. At least half of our working hours have to be dedicated to real estate. Next, have you worked 750 hours in real estate? At least 500 hours to actively managing or materially participating in the management of the property that we're taking bonus depreciation on. So you can't just buy a property, go through all these steps, and then say, I hired a property manager and I'm, doing next to nothing. Okay, we have to show that we're materially participating in this rental property.